The S&P is likely to still go lower, but at this point, the easy moves are over. It's March 4th, it's late in the day, and we're looking at the S&P having broken the 5,800 level, came down into the 5740 area, and the cash got a little bit lower than that, and now it's bouncing toward the end of the day, as it has been doing pretty much every day. And we're expecting that we're in a beginning of a bottoming area into next week. It is still possible we'll see a little bit lower prices on the 5th or the 6th of March before a bounce up into Monday the 10th. And right now the sentiment is very bearish, and markets don't go down and down without the sentiment being shaken a little bit. So you have to expect there will be a meaningful rally up until Monday before it resumes on its merry way down, and we're expecting a decline from the 10th into the eclipse on the 14th, and potentially another rally, and then another low on the 25th of March. Now the lowest low conceivably will be on the 14th, and it could also be on the 25th, and we don't know that yet. What we do know is we're looking for a 10% correction, which would take us down into about 55.58, I believe, based on the futures. And there's a good chance we will reach that eventually. But now we're expecting to see some consolidation, potentially leading to a rally into early next week, followed by lower prices next week and the week after. Recognize there are always many cycles running around at the same time in the market, and oftentimes they fight each other, and oftentimes there are rallies that are based on one cycle and the rest of them are down, and it still show up, and then the market turns down. The trend is still down, okay? The other thing is, when you look at the 2-month cycle, it's been very, very accurate, and it's continuing to say we're right around the low area, ready to have a bounce into next week, followed by additional decline. The 19.3-year cycle is also repeating. It came in exactly the same point, which is like March 3rd or 4th as a low, and so far that's where we're at. And it did happen from the February 19th high to the early few days of March has happened exactly as we said. So the rest of the pattern, basically it's more sluggish, and it does wind up going lower, but not without some rallies in the middle. The 147-week cycle is continuing to repeat. The 54-week cycles times 3 continuing to repeat. And the two I mentioned, the 19 and the 3rd-year cycle and the 2-month cycle, they all are basically saying the down move is not over, but the easy part's over. So if you're short and you want to start taking profits, it's fine. You want to move your stops down, it's fine. Also, one of my students brought to my attention the 5-year cycle, which was exactly 5 years ago in 2020, going into the pandemic. The high again came in on February 19th, and the swings down are extremely similar to what we're expecting. Of course, that was a big, big move of 20% or so. But the point is the pattern is very similar. The dates are very similar. That had a March 25th low also. And the astrology, actually, one of my students pointed out, is extremely similar. The 5-year cycle is caused by an astrological connection between Jupiter and Saturn. Alrighty? So there's a lot of information saying the market's probably going to go lower, and the possibility of a 20% correction is very slim. But nevertheless, you have to consider the possibility that the last leg down, which will start on March 10th, could be the biggest. Okay, so this possibility makes some money if you go short one more time, starting next week. Oh, also, we've been giving, we started another trade forecast mastery course last Sunday, and some people couldn't get there on time, and so we haven't. What I'm doing is one more session 1 on Friday night this week. So it's still possible, if you're interested, to jump in, but you'd have to get it done soon. Check the link below and the description below. That's our update. Have a good trading week.